Good morning and welcome back to Almus Market Mornings. It's going to be an action-packed week. There are central bank decisions from Bank of Japan, US Fed, and the Bank of England this week. Moreover, a Z put, similar to a Fed put, is something that's come up. This is after President Xi Jinping, whose push for economic expansion and tech innovation is feeding some optimism towards Chinese stocks. Good morning, JK. What should investors be looking forward to this week?
Good morning, Swaraj. Yes, I think this is again going to be a very busy week. Uh, and Overall, in the financial markets, what we are also seeing is divergent approaches or atmosphere that is building up. If you look at the US various policies, including the tariff policies, are believed to be, going forward, creating some sort of a slowdown in the economy, and even a recession is not ruled out. No, none of the officials are totally ruling out a recession, but they are also calling it as a short-term pain for a long-term gain. If you look at the economic data from the US, clear demarcation between the forward-looking and the backward-looking data. The backward-looking data like employment and the inflation are yet to reflect the negative impact of various policy changes that have happened. But if you look at the forward-looking, the latest one being the Michigan consumer sentiment, there was a very sharp fall in the consumer sentiment. 22-month low on the consumer sentiment, and the inflation expectations are also jumping. So that's keeping the U.S. markets really on the defensive. Although we did have some bargain hunting in the U.S. Stock market on Friday, but it's a sense that markets are going to be under some more pressure. But in the contrast, you're seeing, like over the weekend, we had news about China taking steps for boosting the domestic consumption, increasing the income for the people. Okay, so other measures, including plans to stabilize the stock market and also the real estate market, these are actually stabilizing the economy and also the markets there. And we know that the German budget committee has also approved the massive spending plans, breaking the decade-old rule on the fiscal deficit. And so why the committee has approved, it will go for a vote in the parliament on Tuesday, and the expectation that it will be approved. So that will be a big boost, in fact, a game changer for Germany in particular, and also for Europe in general. So this is another uh, big thing that's happening, and possibly a positive development compared to what's happening in the US for the time being. And of course, we also have the central bank meetings this week, but none of the central banks are expected to change their monetary policy, be it the Fed or Bank of England or Bank of Japan. All of them will be holding the rates steady, but focus will be on future guidance, particularly from the Fed, in view of the fact that various data points have now been on the weaker side, and the market is also now starting to discount three rate cuts. And we'll also have a dot plot whether the individual members change their expectation on rate cuts from one that they had indicated in two meetings before, and whether there is a change. That is something that we are looking forward to. As far as Japan is concerned, we have had mixed indications recently, but overall data has been strong. And this meeting might not see a change, but there will be an indication whether the next meeting in April will be, looking for a change. Bank of England, I think inflation has not been falling as expected. At the same time, growth is also somewhat struggling. Uh, I think the bank will hold its rate steady, whereas there is going to be a spring statement from the finance minister on March 26, which will outline their plans for growth, even as they're constrained by the fiscal. So there is a lot to look forward to. And of course, I'm just looking at the fact that the latest data from China has also been much better than expected, particularly on the industrial production. Retail sales have been steady. fixed set investment has also gone up from 3.6% to 4.1%. Unemployment rate, of course, has also gone up. But overall, there is improvement that is seen in the Chinese economy, and also with the measures that is envisaged by the Chinese government. I think markets are looking at a positive trend continuing for the Chinese stock market as well. We are already seeing the Asian markets today opening on a very strong note, be it Korea or Japan or even the Australian market. They are all opened higher. Indications that are that even India, after being under pressure last week on various negative news, is likely to recover this week. Of course, we are not actually falling or are moving into any positive trend, but it is at least trading well above the recent lows that we have seen in a short range. As far as the currencies are concerned, there is a bit of consolidation going on in the dollar index as well as the major currencies. I think the next trigger could come from the German decision. I think, although it is a discounted fact, but once it becomes a law, or it becomes legally approved for spending the massive amount of money that they are planning, and the government starts issuing their bonds for new borrowings, again, we expect the demand for euros to increase, and this will automatically push the dollar index down. And of course, the other economies showing some positive tendencies will also keep the dollar index under pressure. And we all know that the US authorities have repeatedly indicated that they are okay with the slowdown in the economy, and perhaps they'll be quite happy with a weaker dollar as well. And speaking of the dollar, on Friday we saw the gold hit the much coveted target of 3,000 on in the late New York session. But of course, it has been consolidating below that for a few sessions, as we have had profit taking hit. But what next from here depends on how the investors behave in the face of attractive yields from the sovereign bonds, whether they still want to buy into gold, which is non-yielding asset, but capital appreciation is mainly that some look forward to, whether central banks want to increase their gold reserves at these high levels, and also whether the key thing, whether the US government takes some decision on their gold reserves, huge gold reserves, which are still valued at around $40, and whether they will go for a revaluation. These are the things that I will look forward to assess whether the gold trend continues beyond. Technically, of course, there is no indication that despite hitting 3,000, it doesn't really show that it's going to weaken further. There can be some more upside immediately, unless there is a game-changing trigger for the gold to at least see some much-needed correction. As far as the rupee is concerned, as we have been indicating in the few sessions recently, there is a tendency to strengthen because of the year-end related flows, dollar index moving lower, and Chinese yuan strength. All these actually now keeping a cap on the rise in the USD beyond 87.50. There's been some sporadic intervention from PSU banks also at the higher levels. FI flows have actually now trickled down to a very small amounts, so which is also possibly that market is taking note of that. Without large outflows, possibly the pressure on the rupee will abate to some extent. And so following the overall trend, and also possible that many investment experts calling for India becoming value by next after China also attracting a lot of money. I think possible we see some change in the FI flows, but it's still not evident. And once it becomes evident, I think the rupee will can get a bit more stronger along with the other currencies as the dollar index moves down. But right now it is only in anticipation. As of now, we expect the 86.50, 87.50 ranges to hold. Thank you.
Thank you, JK. And the three central bank meetings are expected this week with the Fed. Of course, the rates, all three central banks, by the way, are expected to keep rates on hold. But with the Fed people would be looking for the forward guidance, the dot plots, because that will be released during this meeting. And given the current amount of uncertainties, I think investors would be very much interested to know what the Fed itself is thinking. Japan most likely won't see a change, but again, guidance for the next meeting, which is expected to be a hike, will be crucial. UK again, there is no expectation in change of rates. Asian markets today have opened higher. Equities in Japan and Korea are doing well. Indian markets are also expected to open up in the positive territory. And when it comes to currencies, all the major currencies are in consolidation. There is a slight dollar weakness bias, which is there. Gold has hit the $3,000 mark, which is a very significant level. And for rupee, there is a tendency to strengthen, which JK mentioned, due to the year-end related flows, broad dollar weakness. It's helping the USD INR pair to stay below 87.50. FII outflows have also been trickling down, so this should help reduce the pressure on the rupee as well. That's it from us today. Thanks for listening. Have a great day, and we'll see you all tomorrow with the fresh round of updates.